All right, what's going on, guys? Luke here. We're gonna go over today how I set conditions, and today was a great example of that, which is why I want to make another video on this. I've already made a video on this before, but I kind of wanted to give you guys the criteria on how you can go about like creating a bias or setting conditions for the day. First, I'll show you guys what I put in the Discord for the pre-market analysis, and this is free. So if you guys want to join, links in the pinned comment. So basically, I said we were in the higher time frame bearish order flow. Basically, I listed the draws for buy side and sell side, and I said I'll be using the gaps above, especially the 1 hour as a condition. If price respects, we look for continuations lower, but if we trade higher and show displacement to the upside, then I will look for longs. Otherwise, I'm leaning more bearish. And I said currently we have a bullish SMT forming. I would like this SMT to rebalance price into the unfilled gap above and then see price continue lower from there. And obviously this was at like just before 9 a.m. and that's what we ended up doing. Like, it's pretty standard. It's not like a crazy like prediction. But anyway, what is the purpose usually of an SMT? An SMT's purpose is to rebalance price, right? So that's why I was expecting this 1 hour gap to get rebalanced and for price to go lower, okay? But how do I determine I want to use this 1 hour gap as a condition? And what is a condition? A condition just is where you use if and then statements in order to like kind of have, how do I describe it? Like, it's where you use like if then statements for a scenario happening. So for example, if this 1 hour gap is my condition, if price comes into this gap and we get a clear short setup and we get clear confirmations for shorts, I will look for sells. But if price comes into this gap and starts trading through it and we get continuation to the upside, then I will look for longs. So it's just setting like if then statements for a higher time frame gap, or the same thing can be said for a draw on liquidity. For example, right, if we sweep this low, we can either see price displace lower and look for continuations lower. But if we come down and we sweep out this low and we get a clear reversal model and a break to the upside, then I will look for longs. So conditions are just setting, setting conditions is just like kind of like, you know, you get what I'm trying to say. You're just setting scenarios for yourself, basically. So again, I wanted this SMT right here basically to rebalance price into this 1 hour gap. And let's look at this, what I wrote down here, right? Number one, you want to look at the higher time frame trend and the draws and liquidity. Number two, you want to look at the major gaps that are in between your draws and liquidity, and then you're going to create a narrative and a plan. And again, that's with like if then statements. Okay, so let's start on the 4 hour gap, or the 4 hour time frame. The 4 hour, what is the trend? The trend is bearish. Okay, at this time, you can't see it now, but we were trading below this daily bullish fair value gap. Will actually be closed there anyway, but whatever. I get on the charts in the morning and the daily is like just ripping through this daily bullish gap. I go to the 4 hour. We're in this huge push to the downside. The 4 hour broke structure. See, we broke below these lows. So the 4 hour is in bearish. It's in bearish market structure. We look on the 1 hour. We are in clear bearish order flow. We failed to take out these highs up here. We're at lower high, lower low, lower high, lower low, lower high. What am I expecting in a downtrend? Like I said, lower high, lower low, lower high, lower low. I'm expecting a lower high to then make a new lower low, right? So that is the higher time frame trend. The trend is bearish. Okay, that's number one. Now we need to look at the draws and liquidity. Now at this point in time, again, this is at 9 a.m. What draws and liquidity do we have? Well, for sell side, we have these lows over here. Let me just take this off. We have this low right here. We have this low right here. We have the new day opening gap. We have the low of the new day opening gap. And we have that Friday low right here, which is a no wick candle, which is usually a strong draw on liquidity. But regardless, we have a ton of sell side draws. We have this low, new day opening gap, this low. We have sell side. Now, what do we have for buy side? Our next buy side draw was this 15-minute high. We had some more 15-minute highs. And then besides that, our next major draw on liquidity to the upside was London high and then Asia high all the way up there. So coming into the day, I know my higher time frame trend is bearish. I have more draws below, but I do have some draws above. Now you're looking for the major gaps in between your draws on liquidity. That's supposed to say okay. So again, where's the biggest gap? What's the highest time frame? The highest time frame gap? It's this 1 hour. Yes, we have a 30-minute, we have a 15-minute, all that, but this 1 hour is the highest time frame of all those. So it's a major gap in between our buy side draws and our sell side draws. Now you're just looking to create narrative and a plan. So again, we were in bearish order flow, right? Lower low, lower high, lower low. If I expect the downtrend to continue, I want price to rebalance into this gap and then potentially look for shorts. And again, if we break that structure to the upside, we start breaking above this gap, then I'm looking for longs. So that's where you create the narrative and the plan. You use this gap that's between your buy side and your sell side as a condition. And you treat it just like I just said. If price comes into this and you get a clear opportunity for shorts, then you look for continuation shorts to the downside in line with the higher time frame trend towards the sell side draws and liquidity. But if price comes into this, we start just ripping to the upside, we get a continuation model, we're clearly disrespecting this bearish gap, then we can look for continuations to this high and then potentially towards London high. That's literally it. So you're looking at the higher time frame trend, and you're marking out your draws and liquidity, you're marking out your buy side, you're marking out your sell side. You're looking for major gaps in between the draws and liquidity. So in this case, the 1 hour was like the highest time frame. You can use 30 minutes, 5 minute, 15. The higher time frames, the more like is usually better. And then you're just waiting for price to draw towards that gap, and you're looking to create a narrative. So again, if price comes into this and I get a clear confirmation for shorts, I'm looking for shorts. If price trades through this hourly and disrespects it, then I will look for longs. And in this case, what happened, obviously, we traded lower and we went to that sell side down there and then kind of just chopped around from there. But the plan did end up working, and our condition, held, and we ended up catching 2 nice shorts today. I'll go through them. If you guys seen the trade recap, you already know. But trade number 1 was I took, where is it? It was the 5-minute inversion right here. I shorted this 5-minute right here, and I went for a really quick 2R rate, like around like that, something like that, 1 to 2. That was the first one. We're delivering off this higher time frame bearish condition, which was this bearish gap. I was expecting price to go lower. The only reason I didn't hold for lower here was because we were approaching 10 a.m. so I didn't want to get manipulated. But if you did run your stop higher, you could have targeted all the way down to that wick or to this low or to this low, right? Then I got into this second short, because at this point, again, we're still respecting this 1 hour condition. So what am I expecting? We're showing bearish strength. I want to see price continue lower because we do have draws and liquidity. We have this low, we have this low, we have this low, this low, this low. So this was the second short that I took. And again, I didn't hold this all the way down just because I was just going for a winning day at this point. But you could see in here, the lower time frame trend is bearish. I got in right here off this 1-minute inversion short, had my stop like somewhere up here. And I just targeted like right down to these candle bodies. But again, we're delivering out of this condition. What do we expect? If we get bearish confirmation, we can short, and you could have held all the way down to this low. You could have held to this low. Again, I got out like right here. But again, the condition held and pushed price lower. And just by knowing that we had that condition, it saves us from doing unnecessary things, because we're giving ourselves a plan at the beginning of the day. We're saying only look for shorts if this condition gets respected, and only look for longs if this condition gets disrespected. So again, this is the criteria. This is all you need. You're looking at the higher time frame trend and the draws. You're looking at the major gaps in between your draws, your buy side and your sell side, and then you're creating a narrative and a plan. And that's pretty much it. Just wanted to knock this video out because I thought this was a good example today of a condition. And yeah, that's it for me, guys. Again, 20% off Alpha Futures code Luke X until Friday. And that's it for me. I'll see you guys tomorrow, and I'll talk to you then. Peace.